Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's April 11th. This will be our chart listing for the day. Looking quickly here at our daily chart, you can see we had a big rally today. I talked about this morning. This morning we were trading below this. You can see the midline coming right up through here on the bigger green. We closed outside this channel yesterday, the gray one. And it looked like we were going to try to close below the midline. And I talked about the fact that I'd be shocked if they don't try to rally this thing back. And sure enough, they rallied it back, and they almost took back most all of the sell-off from yesterday. In fact, they had taken back probably 95% of it when we sold off slightly into the close. So, but still a big rally day to the upside, just basically erasing everything from yesterday. It's like they just suddenly forgot that they can't lower rates, and the market comes roaring back. So no surprise really. I just don't believe they'll allow this thing to sell off before the election. I keep saying that, but I don't want to sound like a broken record. But that's the way these things work, and you can't believe anything they said. I didn't see the report myself, but somebody emailed me and said that they would just revise another report. I talked about how they revise not only what they tell us when they give us the reports, they're fudging them because they always go back and revise them, and you never hear anything about it. And that's what I encourage you to go research if you want to see it for yourself. But somebody sent me an email today and said they just revised another report, and of course it's a lot worse than what they tell you back when they announce it. So who knows how bad it really was yesterday? Because I guarantee you we didn't get the truth. Anyway, just expect that we're going to continue to see inflation. We're going to continue to see. We're not going to see any lower rates anytime soon, in my opinion. Not unless they just lower them because somebody's trying to get votes. Also, somebody asked me. I talked about how to offset this inflation, look back to the 70s and try to use the same tactics because we're basically reliving the 70s. Real estate's inflation's roaring, real estate prices are climbing, rent's climbing, gold's climbing, silver's climbing. Now we've also got cryptos that are climbing. So it might be something else that you can look into, maybe cryptos. I was real slow to the game in those cryptos. I just didn't believe in them. Wish I'd have been one of the ones that bought in when it was, when Bitcoin was um, under $1 or whatever. I'd be a gazillionaire now. If you'd have bought $1,000 worth, there's no telling what it would be worth. But some things come and go, and sometimes you get a shot at them, sometimes you don't. It's a shot in the dark sometimes, but I was just not a big believer in it early on. But it looks like it's here to stay, and it's probably the future. So I don't think it's too late to invest in them. Just pick them wisely, and know that they're going to be volatile. So, but where I was going with that, as far as how to offset this inflation, I talked about gold and silver, and somebody asked me, "Are you talking about physical gold and silver or paper gold and silver?" And my response to that is just to clarify what I've done. I'm holding physical gold and silver. I don't have any paper gold and silver. Now I have traded paper gold and silver, but I'm not holding any long term. Occasionally I'll buy a call or a put or whatever in the commodities, and uh, but I'm not holding anything long term like that. But my final answer on that, after now that I've clarified what I hold, which is physical gold and silver, not paper. But my answer to that would be, if you think we're going to see something serious and the economy is really going to crash and we're going to go into a depression or something like that, then you probably want to hold physical gold and silver because paper is probably going to be worthless if something crazy happens. Now, if you just think the economy is going to continue to flounder and we're going to see high inflation, we're going to relive the 70s again, which we didn't crash and we didn't burn, and we probably won't this time either. We'll probably have a serious financial condition and maybe go into a slowdown? Are we going to have a depression? I don't know. I don't have that crystal ball. But if something like that were to happen, you want to hold physical. You don't want to hold paper because the paper might be worthless. You know, when the stock market crashed during the depression, you know, you couldn't give away stocks, so they were worthless basically almost for a while. Took I forgot how many years it took before stocks came back. And so, yeah, if you're thinking something like that's coming, then by all means you want to hold physical. But if you're just if you're just trying to hedge inflation and you think that we might go in a downturn, nothing crazy is going to happen, then you're probably okay with some paper stuff. That's better than nothing, because if you don't put it into physical stuff anyway, and and you got it somewhere else and the market crashes, it's not going to be worth anything anyway. So it doesn't hurt to try to buy a little paper. It just depends on what you think is going to happen. So, and I don't have that crystal ball. I don't know what's going to happen. I know that we're $38 trillion in debt, and there's no way we're ever going to pay it back. And the only way to get out of it is to inflate it away. And I think that's what they're right in the process of doing, inflating that debt away and making our money continually more worthless every day. And, it's not that everything goes up, really. Everything goes up because the money's easier. And it's just like the $20. It's just like the $20 minimum wage in California. It sounds great. It's a wonderful idea. It seems, but if you understand economics, you realize that hey, by raising that rate to $20, I forget they've already talked about thousands of people that lost their jobs because these fast food companies just laid them off, couldn't afford to pay them, and the other ones they've already talked about raising their prices 18 to 25%. So it's just a cycle. All that does is cause more inflation, and nobody ever gets ahead, and it hurts it not only it hurts everybody because it causes more inflation. And if you understand economics, you get this stuff. So I don't understand why why they continue to do these silly things. And you need to let the market. If you understand economics at all, the market will determine the pay rate. If it's not enough, nobody will work for you. And if you can hire people at that rate, that's the going rate. And so you need to have higher aspirations than working fast food all your life. They talk about livable wages. Well, I worked at fast food part-time. I worked for less than minimum wages. I didn't start at the top. I started at the very bottom. You have to work your way up. And I don't know. I didn't mean, I don't want to get into politics and all that, but I do understand economics 101. And and when the government sets minimum wages, it doesn't do anything but drive prices up for everybody else. And you just offset those wage increases. And then you got to do it again and again. And back when I was starting, the minimum wage was, I don't know, $3 or something. I can't remember. It might have been less than that. But I worked for less than minimum wages at times because because I didn't have any skills. I couldn't, I was just a laborer. You could show me something to do and I could do it. But I was too young. I didn't have any skills. I didn't have any training. And so I wasn't worth a whole lot of money. But I needed a part-time job, and that lined my pockets with part-time money. And so that's just how it works. But anyway, let's get on to the lesson here. Again, I'm not an economics teacher. Take everything I say with a grain of salt. I'm just telling you from experience, and I do have a college degree, and I did take plenty of economics classes, so I do understand the basics of economics. I'm not a guru on that at all. I just telling you what I know from experience. So take that however you want. Do your own research. Never believe anything anybody tells you. Back it up for yourself so you know for sure. But anyway, back to the chart. They rallied it back. No surprise. We'll probably be trading up here with a new high before you know it. It wouldn't surprise me at all. If this gray channel plays out within the green one, we did have a close outside. Maybe we make a new high and then we correct. We are in somewhat of a range here. So we may just keep chopping sideways in this for a little bit till the market kind of figures out what it's going to do next. So there it is. You can see it. This is just a little congestion mini range, similar to this one. And the last time we broke out of it, we didn't. You can see we broke out of it, made a new high, and we may do the exact same thing again. Or we could just keep chopping sideways for a little bit, make a new high eventually, and then sell off. I mean, if we follow the rules here, we do have a close outside. I would say that's convincing. It's not super convincing, but I would say that's close enough to say we got a convincing close outside. So if we make a new high now, we may make two legs up, and that'll take a while on the daily chart. So we'll see where we go tomorrow, but there it is. Again, no real surprises today. We did have two new items. We had the PPI at 730, unemployment, along with we had a 30-year bond. Normally I'd tell you don't worry too much about 30-year bonds, but right now they're important because they revolve around rate changes, and the bonds actually ticked up, which is another sign that the rates are probably not going to drop. So it was not. I don't think the bond auction is what they expected, and you can see they'll tell you that led to the rally that we see today. Let's flip over to the 2000 tick chart, and we'll go through those trades. Okay, just to clarify real quickly what I was saying about the bonds. This PPI news showed a slight downtick, which everyone tried to perceive, or which they try to say or have you perceive is that means that maybe yesterday was a little overblown. It's not that big a deal. Maybe inflation is not that high after all. And so for that reason, bonds ticked up a little bit. That's what the news is going to say. It's all smoke and mirrors. It's all BS. I mean, we all saw the report yesterday. We all go to the store every day. We all fill up our tanks with gas every day. We know inflation's still going. And so for them to say that it's ticking down is just, they'll come back and revise this later and it'll be BS. All that was probably to offset what happened yesterday. And you see it did exactly what you would want. They pretty much took that whole sell-off yesterday back. And that was probably the whole purpose. And they'll probably come back down the road and revise it and say this was not only not lower, it was higher than what they were projecting. That's what keeps happening. So it's just all smoke and mirrors. So just be careful. Don't believe any of these news items. Just be flat, because you don't know what to expect. And even if you do, a lot of times it'll shoot in the opposite direction and run everybody's stops and get everybody into the market before it reverses and traps them on the wrong side. And so don't trade during this stuff. Not right now. It's too dangerous. I know there's a lot of I wouldn't say a lot, but there's some trading strategies out there based around trading the news. If you're going to do that, you better have some deep pockets, and you better expect to be down quite a bit before you get it back into the black. So, and it's too dangerous. You can get wiped out too easily. It's not worth it when you can trade the market safely. If you follow our rules and our strategy, you can safely trade this thing without taking any big losses. That's what I recommend you do. But you can see it looked like we were going to have another range day here. Let me back out again. I'm getting ahead of myself. And then we finally broke out. We went exactly a measured move, which is this dash line up here. And it took a while before it finally sold off again. And I think we have an overshoot up here. I played around with this to see if maybe it was higher and I had it wrong here. But in the end, I think there's an overshoot here. And the market went sideways a little bit before it reversed. There's a lot of momentum here, and it took a little while for that momentum to subside, and we finally sold off a little bit. But now let's zoom in and get through these trades and wrap this day up. And again, they had the PPI this morning, so you need to be flat. There really wasn't anything you could trade until after this came out. And you can see it spiked up and then went into this channel. This is a spike and channel. And we spiked up into it. And just as it's starting to really get back to normal here. And so it comes back and it sets this trend line. And then by the time it comes back and confirms that, I think you're good there. And you got a nice second entry there. The signal bar is close. I think it's close enough to be in the top 1/3 to want to take that trade. It's a second entry long, and it confirms that key entry point. I like that one. You can see that's a quick, easy move. And then it's just working sideways before you get a triple test here with another nice signal bar. And even though we're not, once you start going sideways, you're not really counting second entries. It is a second entry long, and it is at the key entry point. You do get your close outside, so look for it to run to a new high, and then kind of be careful where it goes from there. And it runs up, and next thing you know, it's making higher, lower highs and lower lows, and we're trending downward. You just get a first entry there, but finally. You make a new low here, and then you get a first entry, second entry, decent signal bar. It's what, 6 ticks, pretty good setup there, and that's a quick, easy move. If you held on through that, you could probably catch a runner. And again, I think we had another overshoot here. You can see how well that fits. Everything fits in there except for this overshoot. We seem to be getting a lot of these lately, and it's just because the market's volatile. It starts selling off, people get scared and dump stuff, and it causes strong moves, the same thing, and then it reverses, and people say, I don't want to miss out on the next move, and they all jump in, and it rockets up. Of course, this was news driven, but that's what's happening here. That's why we're suddenly getting these overshoots. The market, whichever way it goes, it overdoes it almost every time. If it's down, it overdoes it. If it's up, it overdoes it. And people are just nervous. This is a nervous market right now. And it's well deserved, because you can't believe anything you hear. You can't believe the news. You don't know if they're telling you the truth about any of the reports. It's just tough trading right now. All we can do, but the key is we do have an advantage. All you can do is follow the price action. It's never wrong, and it'll always lead you and show you what it wants to do. Sometimes the market gets doing like this, and it's hard to know what it's going to do, but we can then switch to range rules. But it'll always show us what we want to do. And when it does get to a time like right in here when you don't know what's going on, just don't do anything. Just sit tight. And this whole range here, there's only really one decent setup right here. And I marked it green because it's a breakout. We're still looking for a new low. So I think you're still looking for shorts here, mostly. And but we did get the overshoot, so it could turn back up. But most all breakouts fail, even if it's only temporary. So when this closes back inside and you still got plenty of room to the lows, even the last swing, just take that trade. I did mark it green because it makes a new high. You're always better off to wait on a lower high here if you can get it. But sometimes it pays to take these trades, especially when they close back inside the range. Even this one was tempting, but it just felt too much like a doji. And it would have worked. But again, I think you have to wait. I didn't draw it, but there's a trend channel right there. And you get your break and new high. So that's another reason I tend to like that one, because you got your break and a new high. And the market could reverse. I mean, the price action could reverse now. And you do get a lower high, but no signal bar. It's unfortunate because it's a really nice move down. Again, you can do nothing there. Too congested. Again, too congested with a failed breakout. Now you might, and I say might because you've already got your close and multiple swings to a new low here. However, the market's still weak. You've got a little bit of a range, and it is a failed breakout. The other problem is you got a little bit of stem there. It's not a great signal bar. So for that reason, I just didn't mark it. You could argue, hey, maybe it's green. If it had a real good signal bar, maybe you take that trade. And then, of course, we do finally bottom out. Notice how we start moving sideways. Look how far away we've gotten from the EMA. You get that first move up, and then this makes it a little higher low, and it's a big bullish bar, still way away from the EMA. I like that one. Now it's aggressive. You're trying to pick a bottom, but everything seems to have played out. Even the new gray channel coming down. And so maybe you take that. There's another higher low here, but because this is just, that's the other thing. This is a triple test and a higher low. And so um, I just don't like this trade here. It's too close to the EMA, so it could run up to the EMA, touch it, and turn back down. And so it's a little risky. It looks a little like two legs up, so like a failure. And you don't want to trade a failure here. You'd want it to be on the other side of the EMA to do that, and it's not. Now you might say, okay, this is a double bottom and you got a failure here. That looks more like a failure, but it also is very congested, and so I don't think I would trade it either. Now there is a second entry here, but the signal bar is no good. Notice that high, first entry, second entry, and it's a nice move up, and you would expect probably a measured leg up there. You can see we got that plus a little, and you get another failure right here, but you're not really looking for a reversal. We've already reversed here, and so now you're in an uptrend, and I just think you have to sit tight. And now we get over and we start working in another range. Notice you finally get a triple test here and a nice signal bar. It's again 6 ticks, very low risk, good place to go long. Takes you up to the high. You actually get a failed breakout, and there's a second entry short there on a failed breakout. The problem is this channel's still in play. And notice we do get the break here in a new high, and then it turns down. But again, this lower trend line ends up holding. And again, you got another second entry here, but it's congested. And you've got this range high here. Now, we did break out of it twice, so there's a good chance it could go higher. But I just don't, because of the congestion and the fact that that resistance is there, and this trend line might even be just a tad, or this range high might just be a tad higher. That looks better there. I just think you need to sit tight on that. See if you get a higher low that closes outside, but you don't. And well, you do. You actually get another higher low here, but that's moved way too far to consider that a higher low. So it's just a first entry. So there's nothing here, and then we're chopping sideways again. But notice this channel's working up, this secondary channel, and you get a break. You kind of chop sideways, and you get a move to a new high right there, and it turns down. And you have a 1, 2, 3 triple test. I like going short there, just trading the range. I did make it green because it makes a slightly higher high each time, and the fact that we're in an uptrend. So it's a little, it's like trying to pick a top kind of. So, but you got a lot better odds when you got a triple test like that, and you're in a range. It drops down and fails to the outside. No long there yet. Wait and see if you get a higher low, which you do with a nice signal bar. Go long there. Quick, easy move. You're just playing range rules. And that takes us into this noontime. I'd be flat 10 minutes or so before for this bond auction because it will affect the market right now. Normally, like I said, in normal times, I wouldn't worry too much about a bond auction. But, you know, when the interest rates are flat and haven't changed, you know, other than a tick or two here and there, up and down, and not really going anywhere, you're not going to see much difference here. It's going to be when something's going on. But anyway, we rally on that news. You get a close outside, move to a new high. Then we're really working kind of sideways here, but we're still making higher highs and higher lows all the way up to this triple test. So it's not really a range, but we're at the upper side of the channel. This channel's played out. And now you got a triple test that actually broke higher and turns down. This closed right at the EMA, so but for it to trigger, it has to break below it. So if it does trigger, I think you're okay for a scalp there. I made it green because it is an uptrend. I would have rather it closed on the other side of the EMA, but that just makes the signal bar even bigger. It's 13 ticks now. So anyway, I tend to like that trade. You'll probably get a scalp as long as you got room to here. Now, somebody asked me about this yesterday. They're looking at it like this swing is too close. There's not room to swing to close out. But this is the one that we were talking about there was a second entry short. This one's really not because there's a tick lower. But just assume that's a first entry and second entry. But even like it is, this is the one you're most worried about. Now, if it bounced here a few times before this went lower, then you'd be worried about that low. But in the big scheme of two legs and playing a range, you're worried about having enough room to the other side. So I hope that makes sense. So this one is not so critical. It's not that you just ignore it, but this is the critical low that you're worried about right here. Okay, a slight interruption, but we were talking about that trade. It bounces, or actually it runs down, bounces off the midline, and rallies back again and pushes through this time. Runs on up, and this is, and you can see we're getting real overdone here. You get this overshoot, and it not only does it overshoot the green channel or the blue channel, it also overshoots the green channel as well. And we're getting close to that measured move. But it comes back, and of course we get the break here, and you just kind of chop sideways a minute. It's really kind of consolidation from this last big move up. And then it's finding some more resistance here before it breaks up and goes right to the measured move. Notice I can't close above that because there's a lot of selling going on from people that know this is the next logical place it's probably going to turn down. And so maybe you go short. We did try to go higher 1, 2, 3 times. Actually 1, 2, 3 right there with 3 bars. And that's a pretty good signal bar. I marked it green, and then the lower high is probably the more obvious one. This is all trying to pick top, so I marked them green. They're aggressive. They're not for everybody. We're still in an uptrend, but it has overshot, so it's probably, if you catch the timing right, with more risk comes more reward a lot of times. And this would have been a quick, easy move down. It didn't just take off like we might hope, but you got to be careful with these. Most 95% of the people watching probably do not want to try to take those trades. You'd be better off to wait on these longs over here because we're in an uptrend. And you can clearly see that support. This one made a new low. It's just a first entry. Again, you're not really looking for second entries, but the market might still move in twos. The problem is you might get multiple swings in here and you can get chopped up. It's easy to lose the counts and all that in there. So that's why you don't necessarily look for second entries. But I'd probably wait on the higher low. It comes here. Great signal bar. And you can see the lows higher, and quick, easy scalp. That's really all you get out of it. And then we're into the 2:30 hour there, and there's nothing to trade in that right there. So there it is. Big rally today. Basically rallied everything back from yesterday, 90% of it anyway. All on a little one, I think it was like 0.1% of PPI that they felt was a little better. Notice they forecast 2, and actually I think they were forecasting 3, and that we got 2% or something like that. This says it forecast 2, but I'm pretty sure I read it was 3, and we actually came in at 2 or something of that nature. So I don't know. Anyway, it doesn't matter. That's what they're claiming is going to rally this market back. And that little 0.1% just pretty much made the market forget all about yesterday and the big sell-off and all the concern with inflation. And but trust me, they're not raising the rates, lowering the rates anytime soon. Not unless they want to create a real problem. I can promise you there's no way they can lower the rates right now. It's just not going to happen. So anyway, I'm going to wrap it up. This is going to wrap up our week. It's Thursday, so no chart lessons on Fridays. Again, next week's going to be a short week, and then the following week I will be gone the entire week. I will be here Monday through Wednesday next week. Thursday, I have an early. I'll be cutting out of here. I have an early morning flight that leaves at like 6 a.m. So I'll be doing nothing on Thursday. I'm going to be on a cruise in the Caribbean, so internet access is questionable, and I'm going to be on vacation, so I'm not really going to be wanting to look at emails and things. So please hold your emails while I'm gone. I'll make another announcement between now and when I leave, but I'm just kind of giving everybody a heads up in case you've missed the last couple of times I've mentioned it. But I'll be gone there for, we'll miss 2 days next week, Thursday, really only Thursday, because I don't do much on Friday anyway. And then the following week I'll be gone the whole week, and then I'll be back that Monday of the following week, back doing our normal thing. So that's barring that I don't have any travel problems or whatever, flight issues, or the world doesn't stop spinning or whatever. So anyway, that was how I saw it today. Not much else we can say about it. Just don't get caught up in all these reports and stuff. Just know that this thing's going to try to find a way to rally back. I don't give a dang what you say or do. And it's probably going to continue to do that all the way to the election. When it does something different, I'll probably be surprised. So anyway, let's wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with Price Action Trading. Actually, I won't be back tomorrow. I'll be back Monday. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.